Investing in liquid mutual funds is a simple and efficient way to park surplus funds while earning a competitive return. Here's a step-by-step guide on how to invest in liquid mutual funds. Choose a platform. Select a reliable investment platform like a mutual fund app or website offered by banks or financial institutions. Ensure the platform is user-friendly and provides access to a variety of liquid fund options. KYC compliance. Complete your Know Your Customer requirements by submitting necessary documents such as identity proof, address proof, and PAN card. This is a one-time process and mandatory for all mutual fund investments. Select the fund. On the investment platform, search for liquid mutual funds. Evaluate options based on past performance, expense ratio, and the fund manager's reputation. Liquid funds are known for their low-risk nature. Investment amount. Decide how much you want to invest. Liquid funds have no lock-in period, so you can invest and redeem as needed. Investment mode. Choose between lump sum and systematic investment plan. Lump sum involves a one-time investment, while SIP allows you to invest a fixed amount at regular intervals. Provide details. Enter your investment amount, select the payment mode, and provide necessary bank details. Review and confirm. Before confirming the investment, review the details to ensure the accuracy. Investment period. Liquid funds are highly liquid, offering quick redemption options. You can redeem funds within a few hours, making them suitable for short-term goals. Track performance. Regularly monitor the fund's performance and market trends. While liquid funds are low risk, keeping an eye on your investment is advisable. Redemption. When you need the funds, initiate a redemption request on the investment platform. The money is usually credited to your linked bank account within 1 working day. Tax implications. Liquid funds are tax efficient compared to traditional savings accounts. They are subject to short-term capital gains tax if held for less than 3 years, but indexation benefits can be availed if held longer. Diversify. While investing in liquid funds, consider diversifying across different fund houses and types of funds to manage risk.